What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 15th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to be talking about the price action in the indices. We're going to go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and we'll wrap up with some options order flow. Before we jump into that, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right into it today. Today was the IWM small cap barbecue, because that's exactly what happened. All these small cap stocks, they got taken to the woodshed. And there were a lot of different areas of the market that were just being taken to the wood chipper today. So we had the S&P 500, and it's kind of funny because when you look at the box scores, you wouldn't really know that. We had the S&P 500 finish down 0.34% as measured by the SPY. We had the NASDAQ QQQ finish down 0.7%. That was our biggest loser for the day. We had the IWM small caps finish down 0.57%. And we had the Dow Jones close up 0.15% as measured by the DIA. So let's jump into it here. And we've been talking about this for the past couple of trading sessions. But the market had gotten a little bit ahead of itself. We hit this R2 pivot level, which means, hey, we had a really nice move in a short amount of time, about a month here. And now we're starting to get a little pullback. And of course, every time we get a pullback from the all-time highs, it always feels like the sky is falling. It feels like what's going on, what's wrong, what's happening. It can feel very stressful, especially if you're not really on top of your risk. In the last two market recaps, I talked about how, hey, I don't feel like I have an edge here. I reduced my exposure 2 days ago, and then I reduced my exposure even more yesterday. So coming into today, I was pretty, able to look at things pretty objectively. I would say it wasn't like, oh my gosh, I'm getting cooked today. I had already taken my stops, in the prior 2 days for the most part. So today I was able to kind of just, observe the price action, see what was going on. And what's interesting is the S&P 500. I think what a lot of traders, need to realize is that if you're an S&P 500 trader, your risk return profile is going to match that of the S&P 500. If you're not, and you trade things that are outside of the S&P 500 that might belong to other groups or other indices, your portfolio could be doing something completely different than the S&P 500. I know most active traders that I talk to, they're not just trading the S&P 500 stocks. So I know there were a lot of traders out there that were just getting cooked, with these small caps as well. And I've been there too, where you're in the small caps and they can really take the elevator down where, it's no joke. Like I was saying, I got to get out of the way here because small cap stocks, they can correct a good 20 to 30% literally in, let's say, 2 to 4 trading sessions. So that's sort of what happened today. So I do notice, if you're just looking at the indices, you don't really see much. But if you're trading things outside the indices, you might see something totally different. So if we go to this hourly chart, you can see this actually doesn't look so hot here. So we have the S&P 500. This is the NQ. Let's jump over to the S&P 500 first, then we'll touch on this one. Sorry about that. So if we flip over here, you'll see into the close, this was like, oh my gosh, what is this, a miracle? Where we dipped all the way inside this weekly value area. Then you can see we pushed higher on volume, and it was like, really? They're about to push us back above value again? And then it looks like in the after hours here, we're just slipping a little bit. You can see we're down 0.15% as futures open up the trading session. Who knows where we'll go overnight. But it was definitely a very ambiguous day where it's like we had this push lower, then we pushed back higher. But as of right now, this price action is all fitting neatly within the context of a new downtrend. So that's really what I'm looking for. Hey, is this just a little garden variety pullback, or is this going to be something deeper? and we go back to the daily, now you can see like in terms of pullback, we haven't really seen anything yet. We could easily pull back to this 20-day, or even, if the downside movement accelerates, we could pull back to this monthly value area high for all we know. So I think it's important to be in a position where, hey, if that happens, am I going to get wrecked? And if you can say, no, I won't get wrecked, I'll take an acceptable loss, that's where I think you have the correct amount of risk on. If you're sitting there like, the market can't go down to this 20-day or I'm cooked, that's when you probably have too much on. Let's go to NASDAQ. And we'll go to the hourly chart. And the NASDAQ has been, the strongest here. And you'll see the NASDAQ did something very similar, pulled into this weekly value area, stopped just ahead of that weekly point of control, had a nice little bounce. But this could very easily just be like, oh, okay, we had our bounce, and now we continue further down tomorrow. And then flipping over to the Russell here. So the Russell, it's a little bit more advanced in terms of its downward move than the S&P 500 and the NASDAQ. You can see the Russell already had a big decline, a bounce, and now the second leg of the decline. Whereas the S&P 500 and the NASDAQ, they're really just the beginning of their decline, if it turns into one. Russell, you can see here in the after hours, is trading down slightly as well. But this one is definitely, starting to get oversold. And you can see, we got this oversold bounce. So now I guess the question is, we got a little oversold bounce. The prior oversold bounce was, okay, we bounced, then we had a couple green candles. If we're really in a downtrend, it really could just be, an intraday bounce. And then we just continue to the downside. But we're going to have to see. This Russell, it's been trading sideways for about 5 months now. And we're trading at the low end of the range. We've definitely been here before a couple times. But the more you start knocking on a door like this, like the lower end of the range, the more likely it is that you could actually push through. So in this case, it would be a push to the downside. And this, for me, really opened my possibilities up to maybe it is a push to the downside. Because we got this sharp move lower, we bounced, and then we immediately rolled right over. You'll see for most of these moves down, I guess we got a little bit of that on this move. See, I guess it's kind of similar. It's not typically a straight line, but we'll have to see what happens tomorrow. I think, it's anyone's guess to say the least. So I don't really feel like, oh my gosh, I have like such an edge here. We're immediately going to bounce higher. I don't really feel that. And then real quick, I don't want to spend too much time on these, but I think it's more important when the market's more volatile to spend a little bit more time on the indices, because that's really going to determine, what happens with the underlying stocks as well. But looking at our Dow Jones was actually positive today, and you can see the Dow Jones is hovering right around this monthly value area high. So I think what also is can be very frustrating about this tape is that it might be like, oh my gosh, the group of stocks I'm in is getting rolled over right now. But then you look and there's always some other index that's green, or just other areas of the market that are ripping while your stocks are getting hit. And it's really been the story of 2021. It's just been these rolling corrections that, okay, one group corrects while the other one rips. Then that group corrects while the other one rips. And it's just been rolling like that. Let's take a look. We'll go under the hood here. And you will see market breadth. Also a poor day of market breadth. But I would say it's not a complete washout of breadth. Sometimes it's good when all of a sudden it's like, oh my gosh, we had 9% advancers, like that sort of thing. That could tell you, okay, this is pretty washed out. Whereas this, we have the negative breadth, positive for the Dow Jones, but not overwhelmingly negative. Looking at our heat map, you'll see, there's definitely some warning signs within here. So Nvidia, this was something we pointed out over the past couple days. Nvidia is becoming a bit weaker, and Nvidia has been the poster child for this rally. You can also see most of these FANG names were also weak. And another just nuance here, like nuances on nuances with this tape, is the other pain point for this market, and I've certainly felt this as well, is you enter a stock or like a group after it's had a nice run and like, oh, okay, let's see if it pushes new highs, that sort of thing. Like you go in on the strength. And a lot of times when you do that, you end up chasing it late. So it's not really that type of market. Whereas, something like say like today, you go in and you're like, all right, you know what? I see the strength is in industrials. All right, I'm buying Honeywell. It's up 2.21%, nice strength. Like I'm buying it. Then what you might find is tomorrow we might have all these FANG names really strong, and then Honeywell's down. So that's definitely another thing to consider. And another reason why I just wanted to go to more cash, because I'm noticing those dynamics, and those are really the dynamics of just a more challenging tape. So Nvidia, this is definitely a bit of a tell, I think. If you look at what this one is doing, so that's this is a drop on high volume, and we just sliced right through that 20-day moving average like butter. So we'll have to see. Maybe this one tags the lower Bollinger Band. But yeah, Nvidia had a very nice run, once they announced the stock split. A lot of times it does end up becoming a buy the rumor, sell the news. Maybe once they split, maybe this thing, everybody goes, all right, that trade's over, and they bounce out to something else. Who knows? Let's take a look. Yeah, so all these FANG names, took a spill today. The semis. Look here at the semiconductors. Yeah, so this group has tried a couple times to regain the highs. So if you look at semis, it's a prime example. If you're going, hey, I'm going to do the textbook entry, enter at the highs, maybe we'll get a nice high volume push through the pivot level. Pretty much if you entered here, boom, you just got knocked out. Then pretty much if you were like, all right, we're reclaiming the key moving averages, like now I'll enter, boom, you just got knocked out again. Whereas if you bought the dips in all of these instances and you sold the rip, you'd be in a better position. So that's something I'm kind of recognizing. Like, it's been a market, and I think this is something I'm taking a note of this for the future. Once you get into a more extended bull market, which is really what this is, because let's look here, we'll just pull up, if you don't think this is an extended bull market, let's pull up the weekly. And you can see, on this weekly chart, we've been in a bull market for over a year now. It's been a fantastic bull market. And what you'll notice here is once you start to get far away from that 20-week simple moving average, this pink line, things get a little bit more challenging, which kind of makes sense because every time we've gotten that extended from it, we always have a pullback. So yeah, right here, it's like, I wouldn't say this is the time to like, all right, let me start a bunch of positions and whatever, because if you're starting a bunch of positions up here, then what happens is we pull back to 41.46 and you're stopping out of everything. And then you're going, all right, now I'm flat. And then that's a lot of times in this bull trend when it's made the most sense to buy. So yeah, it can be challenging. It can be frustrating. I totally get it. Yeah, and it's something where these moves, these downward moves that happen in the market, these are just as normal as the up moves when you look at the chart. So let's look here. Yeah, it's not like, oh my gosh, the market's broken. What happened? Like, it's just how the market goes when it's in an uptrend. So if we look at our sectors, what was strong today? There were some areas of strength. Regional banks were strong, up 1.2%. Utilities were up 1.13%. Yeah, those were our two really strong areas. And then taking a look at the weak areas, we had software down 1.22%. We have the cannabis names down 2.08%. We have blockchain names. Semis down big. So a lot of these areas, they were getting barbecued to a crisp, like a burnt barbecue. And we pull up our style factors. You'll see very similar. Best performing style factors were min, vol, and defensives. So that should tell you that institutions, they're trying to get to a more defensive posture as well. Because I think all of us that are in this game together, we're all in it. Retail, institutions, we're all in it together. We have different roles in it. I think no one knows what's going to happen next. So I think if anyone's telling you like, oh, I know, it's really tough, because certainly when you look at the technicals and all that good stuff, you see, okay, we're in a long-term uptrend. Now things are starting to sour. So it's very tough, and I really think it just goes back to the best traders that I know exercising your sit-out power. And by exercising your sit-out power, maybe you're wrong and maybe the market just rips higher. Maybe you miss a little bit, whatever. But I mean, if that's the worst thing that happens, you sit out on a little bit of upside, that's not so bad. And then maybe you sit out with a cash balance, and then maybe everything just turns to the downside. And that's where you get another golden opportunity. So I'm going to bring up an example here. I just think it's important because I know a lot of traders got cooked today. I was actually on a Twitter Spaces, and I think on like a Twitter Spaces, like everyone wants to be, upbeat. Everybody wants to be, a pro's pro, and nobody really likes to talk about, losing or losing trades or like, being in a down tape and what that's actually like for a trader. But we all know it can be very challenging. It can be tough. So you basically, if you're an active trader, you have to have some sort of mechanism for taking down your level of aggression. Because look at the coronavirus crash. There were some players that, my system is as soon as XYZ level breaks, maybe it's this 20-week simple moving average, okay, I'm out. And they're going to take their drawdown, but they save themselves from a huge drawdown. Then think about it. Once you're down here, of course, when we were down here, I remember when we were down here, I was sitting in cash, and I didn't believe that this was the bottom. I remember this is pretty funny. I was waiting for a test of, I think it was like 1800 I was waiting for. We didn't end up getting that. I jumped onto the train a little bit later, but it still worked out, beautifully. But my point is, if you didn't have that sit-out power, you got barbecued. Whereas if you did, all of a sudden you're sitting down here, and maybe you don't start getting long down here, but maybe you start getting long up here or something, and then you're like, all right, now we have this huge bull market ahead of us. These down tapes, they are exposing opportunity. But it's really like, it's kind of crazy. In trading, it's really like doggy dog. Not everyone could be a winner. Your opportunity is you're essentially feasting on everyone else. It sounds kind of crazy. There's definitely other analogies, but you're basically feasting on other people's carcasses, that got blown out. Now suddenly you can buy what they sold. So I think the key is, really what I'm getting back to here is, if you don't feel comfortable and you don't feel like you have an edge, you don't have to be in there for every hand. And that pulls me right back. I've read this for the past 2 days. I'm going to keep reading it really every day. We're in this weird tape. In the stock market, you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moment to wager. You get to see the market's cards before you bet, free of charge. This is a wonderful advantage, yet few exploit it. This doesn't mean you have to turn into a perma-bear or anything like that, but hey, if things are getting a little intense, it doesn't hurt to have a little bit of cash. That's all I'm saying. All right, so let's jump into, take a look at some of my trades for the day, and then we'll wrap up, because I don't want to make this video too long. We'll go through these very quickly. Let's see, where was this? Okay, so for options trades, this was my only trade. So I closed out, I had some SPY puts, closed them out for a small winner. And, this definitely wasn't like the best close on that position. I think by the end of the day, we were a little bit lower. But yeah, this one I had some puts that I added to my portfolio yesterday. This was definitely helping, just in terms of the tape being down. I'd raised some cash. I bought some put options. So today I wasn't really like sweating it or anything like that. Today was all good. And then what else did I do? So the last 2 days, I've really just been reducing my positioning. And today I actually did some like test buys, like some dip buys. So I'll pull these up. That's another thing that's so funny. This is another thing I notice when the market turns red. First of all, everyone says they're all in cash, nobody ever says they're stopping out of things, but people will, after the fact just be like, oh, I'm in all cash once the market goes lower. So I'm not saying people are doing that, but that's just like I noticed when I talk to a lot of people, it's kind of like that. But yeah, now that I was in cash, yeah, that's the other thing. Like, yeah, once the market goes down, then everyone says, "Oh, I'm in all cash," because I guess people, they don't want to make it seem like they're losing any money or they take drawdowns or whatever. But nonetheless, yeah, I was, you guys could see I was taking my stops, so I raised my cash balance. So today I was able to add a little bit, and then nobody wants to say they bought something when the market's down. But yeah, so I got long Shopify as a starter position. Shopify is a name that I want to roll with really in the longer term, to be perfectly honest. Like, I just want to be on this train. And so I bought here. My stop out point is actually like just below where we are right now. So I might stop out of this tomorrow for a small loss. If that's the case, if we get my close below, I think it was like 1438 I set out as my stop. But I like this one for the long term. I'm going to keep an eye on it. If I take my stop, then I'm just going to keep this one right on the watch list because I know this is one of the premier stocks in the market. If the market's weak and it drags it down, I'll stop out and then I'll just keep it right on the radar. And the other name that I entered as a little test buy is DigitalOcean. I'm liking this name more and more the more that I learn about it. And this one, went over this one in detail earlier, but DigitalOcean, it's a cloud name, and it trades for only like 16 times sales. The growth rate is really nice in terms of how they're growing their revenues. Profitability is good. They have a nice EBITDA margin. I believe it's like 79%. You generate nice cash flows from operations, and this is pretty much like brand new merchandise here. So one thing that I hate is trying to get long like CrowdStrike. I mention this all the time. Trying to get long these stocks at 60 times sales. These names that everyone already knows about, everyone's gotten paid on a million times over, and it's like you're beating a dead horse. For those, I honestly feel like you're better off when the market corrects buying them because we all know they're battle tested. They're not going away. We all know they're growing a lot. It's like, what's the big deal? Buy them when they're down or when they're like coming, around a pivot or something. But trying to buy this thing up here and then just like, hoping for the best. It's very tough. But yeah, DigitalOcean, this one I think could be a new leader. And this was a name I actually stopped out of recently. And it's a good thing I did because now I got another opportunity at it. So I bought this for $46.99, pretty much right at this monthly point of control. I have my trade plan set, I have my stop set, I have my target set. And at this point, I'm going to let it play out. We'll see what happens. But I definitely like this name as well, fundamentally, and we'll see if it shapes up. Because really, I started shopping for some of these small cap growth names. Because if you look at IWO, this is the small cap growth ETF. So another thing, it's going to end up being a little bit longer than I thought. We're going to skip options today. There's not really much to talk about on the options order flow. But this is another thing. If you're getting frustrated as a trader, you have to understand what you're trading. So if you're primarily a growth trader and you traffic in small cap names, look at what small cap growth has done over the past, 5 months now? Over the past 5 months, we had a decline and we have not come back from that decline. So really, where has it made the most sense to buy small cap growth over the past 6 months? It's made sense to buy down here. It's made sense to buy down here. Hasn't made sense to buy up here. Hasn't made sense to buy up here. Hasn't made sense to buy up here. Has made sense to buy down here. And so on and so forth. So I think most traders, they want to buy up here. Then when we get down here, they don't want to buy. So for me, it's like I want to respect the trend. I want to keep a higher cash balance. But if I can get a shot at something down here rather than up here, I also want to try for that and at least take the shot. I'll set my stop. If I get stopped out, it's all good. You live to fight another day. But yeah, that was sort of my mentality for getting long DigitalOcean on the dip. So that about does it for this market recap video. Hope you all had an awesome trading session today, and I will see you all tomorrow.